And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show, presented by RIA Advisors.
And good morning. It's a new year. Although, based on traffic, I think people are still taking a little bit of time off. Welcome to Financial Fitness Friday. I'm Rich Rosso here with Danny Ratliff, CFP Squared. So we appreciate you being with us. We have a lot of exciting things planned for you this year. But in the meantime, it's pretty quiet. And not on the roads, but just in markets. Yeah, we've seen some rotation out of tech. Right? Yields are kryptonite to stocks. So if yields creep higher, stocks are going to take it on the chin, especially tech. But for the most part, I think there were lessons from last year, Danny, that investors need to understand, especially ones that get real impetuous and emotional and make knee-jerk decisions. Because if you decided that last year was discouraging, and for most of the year it was, and you decided that you were just going to get out of stocks and go into 5% money market, well, you missed a hell of a rally, didn't you? Which tells you just cannot get all out of stocks or all in. It doesn't work, especially when we are so keyed into the Fed. They are so keyed in to what's going on in markets. The alliance is too strong to break. So the narrative of Goldilocks is definitely out there. But before we go into that, last year, right? How many people wanted to say, well, why would I do this when I can do this? And missed out on a tremendous rally.
Well, I think there's a lot of people, and it's easy to understand. I mean, market dynamics have shifted significantly throughout the year. I mean, we did see, we talked about this ad nauseum in the sense of what has done really well. And, you know, being that there was the tech sector, now you are seeing a little bit of that rotation. Now, how long that goes, I don't know. Mm-hmm. You know, where this year so far it's been healthcare, financials, utilities, which have done, you know, well compared to their peers.
Like whatever did the worst last year, right? We are seeing some money go into that. And that's what we saw in October, November, December, finally. Because as money managers, how discouraged were we?
Yeah, I think everybody.
You know, it's the 7 stocks, that's it. And we do own semiconductors. And we do own some of those stocks for those who are in our stock portfolios. We do have tech, ETF, and semiconductors. But no fiduciary, no money manager in their right mind is going to put you all into 7 stocks.
No.
That's not a risk manager at all. No.
Well, and I think that was the most frustrating part about last year, and the sentiment changed significantly when you look at how poor, you know, August, September, October was. Then you get into November, and I think by the time everybody got to the end of November, people were a lot more optimistic. And, you know, I see it waning a little bit now going into the new year that, you know, some major shift has occurred, but nothing's really changed.
Nothing has really changed except the fact that yields are starting to creep up. And frankly, 6 rate hikes, right, are priced into the market. Now, we have important numbers this morning, right? So we have non-farm payrolls. The estimate is supposed to be 162,000 jobs. But the number you really need to keep an eye on is average hourly earnings and where they're headed. Yes, the rate of change of inflation is slowing down. But inflation itself and where it is today, for many items that you buy, Brent was just talking about his homeowners insurance going up, what, 60%? Over 60%.
Average increase was 37%. I mean, it's so. But in that instance, that just shows you need to pay. It pays to shop.
It does pay to shop, but even then, you're really not going to save maybe as much as you think for as long as you think, because all of these companies are raising prices. There is going to be a point. Now, we're starting to see job hoppers not hopping as much, right? We are starting to see wage growth temper. That's important. But Unemployment rate is still very low. The jobs market is still very strong. People are still spending, and there's still a lot of cash out there. So the fact that we've already baked into the Goldilocks cake 6 rate decreases coming, that's what the market expects. So you always got to wonder when the skies are clear and the water is glassy, and you're going to be complacent. You're going to go with this narrative, which is the most popular narrative right now, right? Goldilocks. Not too hot, not too cold, just right. But then you got to worry about one thing. When Cocaine Bear enters the room and takes Goldilocks away. Not one of those nice little bears. Cocaine Bear. So you got to be aware of the fact that the market has baked into this cake a lot that is supposed to happen that could be very disappointing overall. I think yesterday, the market was up most of the day, and then from the end of the day, we have a sell signal right now on the S&P 500. But that doesn't mean this is a fall off the cliff. You got to make a big change. No, sit back, watch it. I'm already seeing articles, Danny, talking about how, oh my gosh, January is so terrible. Oh my gosh, so goes January, so goes the rest of the year. So I put a comment on this article. For gosh sake, it's only the 4th. Can you wait? Can you just wait? But this is how super speed markets work. And you have got to make sure you don't take it out on your portfolio or your allocation.
Well, I think you're seeing that sector rotation. We are seeing technicals change a tad bit, but which was to be expected as the market was extremely overbought. Yields were overdone. On the downside, we do expect them to creep a bit. But, what is, do they get that 6 rate cut?
Yeah.
What's going to prompt them to do so? We're gonna need more negative economic data. Now, granted, it is shifting downward a tad bit, but it's not in an area where, doom and gloom per se.
Yeah, correct. It's not.
Now, PEs are high.
Matter of fact, you need Cocaine Bear to run in for the Fed to possibly cut rates.
Yeah, and that's typically not good for the markets initially.
So the anticipation, what's baked into the cake, you have got to be concerned about the complacency. That doesn't mean you need to make a change. You just need to be sure that the narrative right now is Goldilocks and something is going to take her out. Maybe it's going to be Drago from what was that? Sylvester Stallone. Rocky. So I always get more concerned when volatility slows down. You're going to see an increase in volatility as the Fed disappoints the markets, or if average hourly earnings come in hotter than expected. Then the market's going to start to ask, gosh, where are these rate cuts? Maybe they're not coming as fast as we thought. And that's a danger. And that's a risk. So I would expect, especially as we get closer to the election, volatility will start to creep in. And then what are you going to do about it? I don't know.
Well, I think this is where you need to find a discipline, understand it, know what you're going to do in different instances, and don't get so emotional about it. That's the biggest issue here.
Exactly. And, everybody's very emotional. You don't get emotional inside your portfolio. When we get back, resolve to be resolute. We'll help you understand what that means when we get back.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Looking for clarity for your investments in the new year? You must attend our 2024 Economic Summit, Navigating Markets in a Presidential Cycle, featuring Greg Valliere.
Trump will be a big presence. The bigger story, in my opinion, is how weak Joe Biden is going to be.
Is the Fed finished tightening?
Liquidity, I think, is underestimated.
Will rates ease this summer?
States are still flush with cash. They haven't spent all their money from the pandemic pandemic relief bill.
How will the election affect your investments?
I don't see any political figure right now who can bring the country conclusively back together again.
Register now for our 2024 Economic Summit, Navigating Markets in a Presidential Cycle, featuring Greg Valliere with special guest Adam Taggart, plus Michael Leibowitz and Lance Roberts. Saturday, January 27th at the Hotel Sonesta, Houston. Navigating Markets in a Presidential Cycle, featuring Greg Valliere. Saturday, January 27th at the Hotel Sonesta, Houston. Registration open now at realinvestmentadvice.com. realinvestmentadvice.com.
You're listening to The Real Investment Show.
Small businesses are discovering that attracting and retaining top talent come down to more than just salary. In today's highly competitive job market, compensation is more than just wages. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Healthcare and retirement plans can make the difference in hiring and retaining the best employees. We can show you how to build an affordable, effective employment package that delivers true value for your workers and your business. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
So this event we have coming up at the end of January with Greg Valliere is really important. Greg was someone that would come out to where I was employed before and just have the most amazing in-depth commentary about politics, but in a way that really looked at it from an academic perspective. No tribalism, no emotional, but just facts and what he thinks, how these markets, how it will affect markets, who are the odds-on favors to run. He was in the camp that Joe Biden would not be running. So it's captivating to hear him speak and give you the insight outside of spin you might hear on whatever station that you listen to or watch. Very academic approach, almost professorial in his, as Lance would call him, Greg Valliere. He made him Italian, which was fine. Greg Valliere. I'm glad he didn't call him Russ Valliere, because that would have been weird. But the point I'm trying to make is it's going to be a great presentation, and then Adam is there, and Lance is there, Adam Taggart, Lance, and Michael, and taking questions about the climate. And then we'll feed you, too. So this is a special offer. It's $99. Go ahead and sign up at realinvestmentadvice.com. But I, for one, am like a little kid going to be at the edge of my seat taking notes when Greg is speaking, because he really is one of the best. He's appeared on how many stations? Bloomberg, Reuters. I also like the fact that he doesn't appear on Fox or CNN or a lot of these other stations. He's really fit for something a little bit more objective than these other stations. So I think you would enjoy it if you'd like to come out and see us all.
Yeah, I appreciated our initial call with him. He had a lot of different insight, things that he was going to share that I think that it's a different perspective that many people didn't think about. It's not necessarily partisan. It's kind of thinking on both sides of the aisle.
Critical thinking kind of thing.
Yep. Yeah. What could happen in this instance? What happens here? Mm-hmm. And some things that I think a lot of people aren't maybe so in tune with.
Yes.
Just a different thought process around it. And so I'm excited as well. It's going to be good.
Very sane, which is unusual.
What is that? Sanity in this world?
Oh, my gosh. The guy is even keeled, let me tell you.
A very rare commodity these days.
And his voice will soothe you. It'll be, yeah, I mean, it's just great. I'm really excited to hear what he has to say. But just even on our call, to Danny's point, he threw out so much great information just even on the call that we had with him. So one of the highlights of my former career, which which is pretty much about it.
But the road got you here, right?
The road is great. The road got me here. But one of the memorable speakers, definitely Greg. So we hope to see you that morning, and we'll serve you lunch, and then there'll be a panel with questions from the audience. So overall, if you're looking to be stimulated intellectually, we hope to see you. So, this is a time of resolutions, and I don't make any. Did anybody make resolutions? Do you make any resolutions, Danny?
We're a little different than most. It's funny, my middle child asked that yesterday, like, Dad, what are your resolutions? I was like, well, son, I mean, I'm kind of always keeping track of goals, progress, processes, things of that nature all along the way. And I think that's where, if you do that and take bite-sized chunks, having one big astronomical goal that you're expected to hit by December 31st can be great. But I think you need to break that down. And I think that, you always need to be setting goals for yourself for what you're doing. So I'm not necessarily in the camp of, I think it's a bad idea. I mean, if you look at the studies, I think 6% of people meet their goals. Most people fall off by, about what? Well, today.
Really?
End of this week.
My goodness.
Next week. I mean, the studies show that people just don't,
wow.
They don't do well with it. I had some friends last year, they were doing a weight loss challenge. And I think by like week and a half, maybe week 2, nobody was sending in their data or their numbers anymore. But that's just indicative of, it's a great idea, but how do you set things in place to make sure that you meet them? How do you celebrate the small wins along the way? I think that's what most people don't do.
I think that's a big one.
Yeah.
The grit, the process is never good, but you've got to really enjoy it, that process. Like if you sit down and write, or you want to lose weight, you can't be discouraged. You have to, or you're going to the gym and you go a couple of times and you're exhausted. You're making progress. You showed up. And I do think that people set the bar too high and then they fail. And I'm with you, Danny. I believe in ongoing goals or milestones, but also the path that gets you there. You've got to find ways to enjoy the path. And listen, I don't find a lot of joy sometimes sitting down and writing something or studying something. But then I step back and go, I'm learning something. I have to sell myself. I don't want to go to the gym today. It's raining. It's this. I have to sell myself on it. And that's being resolute about what you're going to do. So all the financial articles we see toward the end of the year, they never change. Increase your savings in retirement accounts. You pay down your credit card debt. Check your insurance coverage for gaps. That's not bad advice, but we know it already. I mean, this stuff is drilled into our heads all the time. So you have to look at what kind of money improvements can I make? Maybe a little bit outside the box. That I'm going to walk a little bit of a different path. And I think one of the things you always get about, I saw it, I don't know, Danny, how many articles, max out your retirement savings. Max out your retirement savings. Well, guess what? You don't have to save everything for retirement. It's been drummed into us. Everything goes into pre-tax 401k accounts. But how important is it? So A.J. Leon, one of my favorite writers, explores the world, big thinker kind of guy. And he wrote this book, The Life and Times of a Remarkable Misfit. He says, step 4 is if you want to make money and lose respect, step 4 is never invest in yourselves. Stock every penny you have in a 401k that may or may not be there to greet you at age 65. I think, and we preach about this all the time, you have to have diversification of accounts. You can't just have all this money in pre-tax. And what I don't like, I saw a lot of articles this time, because Roth in the Secure Act is really picking up steam. More and more discussions. You would not believe, Danny, how many advisors sell Roth as a emergency savings account to take out. Oh, you could take your after-tax out money anytime. That is not good advice. That is clearly not good advice.
Well, the problem with that is that it starts to train people to believe that this is a piggy bank, which it's not. And, it's a great tool, fantastic. We're getting more flexibility and availability with it. Mm-hmm. However, we've got to think about what is that hierarchy of savings? Where do we go first? And so while I love if everybody out there could max out their 401k.
That's great.
But
Roth 401k.
Yeah.
But yeah.
Yeah. But do you have an emergency fund? Mm-hmm. Do you have your financial vulnerability cushion? Are you investing anywhere else? Do you have multiple sources of income? So what I mean by that is that we can't just throw everything here. And then when something bad happens, the only place to go is that 401k. And then it's kind of like the credit card. Just this one time I'll put it on the credit card, and maybe you don't have the funds to make ends meet to go buy whatever it is that you need. Mm-hmm. And listen, there's going to be times that you have to do that.
Yes.
But once we typically open that box, we begin to go to it more frequently, right? It's like getting one cookie out of the cookie jar.
That's
Who
right.
gets one?
Once you realize you can do it, then you have excuses to do it and keep doing it.
It's the Pringles can. Once you pop, you can't stop.
Yeah, that's true.
I mean, because you become, okay, you know what? It's okay. I'll do a little bit more. Oh, this isn't a big deal. But then you end up in a hole, or it becomes familiar. Mm-hmm. It's a habit. And
your advisor giving you the idea that that's fine to do is not a good idea. Not a good idea. So diversify your accounts. To Danny's point, you've got to have, and again, most people will say 3 to 6 months of living expenses. We say 12. Sorry. I have a client, I spoke to a younger person yesterday, and she wants to match. She has no emergency savings. None. Zero. Zilch. And she wants to max out her retirement account because that's what the guy at Mass Mutual told her to do. I said, no. What's the match? She goes, it's 4%. That's what you're doing. You're going to do 4% in the match in Roth. What, Roth? No, I was told no. Okay, so Roth, and then we're going to open an online savings account, high yield savings, and you're going to put what you would have put into the 401k into that account until it gets to the level we need it. Then I will be all for you
putting more
in. Because the one thing she said to me is what her Mass Mutual guy said was that, well, you can always take a loan if you need money. Right away we start with the leakage. Financial advisors cannot start conversations about retirement accounts with leakage. That's not the way to do it. Telling you that you can put after-tax contributions in a Roth. My daughter brought this up to me about 4 weeks ago, and I went, what? She goes, yeah, I read about how this could be, I could put it in there and I could take it out to buy a house because it's after-tax. No, we're not doing that. We're not doing that. So we get back. We got about 4 more really cool ideas for you. Hey, you want to maximize your consecutive travel days with your PTO in 2024? Take January 2nd through January 5th off. That's 9 days. 9 days. You got to time it perfectly. I got to send this to my girlfriend. Put it in the break room at the station. So we'll be right back.
Can't you hear the sound that's in the air? It's rock and roll. 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 It's rock and roll.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
Looking for clarity for your investments in the new year? You must attend our 2024 Economic Summit, Navigating Markets in a Presidential Cycle, featuring Greg Valliere.
Trump will be a big presence. The bigger story, in my opinion, is how weak Joe Biden is going to be.
Is the Fed finished tightening?
Liquidity, I think, is underestimated.
Will rates ease this summer?
States are still flush with cash. They haven't spent all their money from the pandemic relief bill.
How will the election affect your investments?
I don't see any political figure right now who who can bring the country conclusively back together again.
Register now for our 2024 Economic Summit, Navigating Markets in a Presidential Cycle, featuring Greg Valliere with special guest Adam Taggart, plus Michael Leibowitz and Lance Roberts. Saturday, January 27th at the Hotel Sonesta, Houston. Navigating Markets in a Presidential Cycle, featuring Greg Valliere. Saturday, January 27th at the Hotel Sonesta, Houston. Registration open now at realinvestmentadvice.com. realinvestmentadvice.com.
You're listening to The Real Investment Show.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets. And unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. It's a quick and easy application. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
What is it about teenagers that they cannot keep up with their chargers? I don't get it. I've had the same charger for like 100 years. I had chargers before they were even chargers, and it's the same one.
The Real Investment Show podcast.
Chargers and AirPods, whatever. I'm a Samsung guy. I'm with the other 75% of the population that has a real phone. Truth. I just speak the truth.
Just say it.
At realinvestmentadvice.com.
If you want to know the truth, listen to this show.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
The Real Investment Show YouTube channel has all our videos ready for your easy access. Now with the new and improved Before the Bell reports, Candid Coffee, and Lunch and Learn replays, plus each day's radio shows like Technically Speaking Tuesday, and the latest analysis from Lance Roberts and Michael Leibowitz. Subscribe and bookmark our YouTube channel at realinvestmentadvice.com.
You're listening to The Real Investment Show.
So I was going to ask Lance, hey, I'm going to get you a charger for your for Christmas. And he said, don't you dare get me a charger. I'm like, okay, I'll just go in the car and drive away. It's a 1974 cherry red Charger. You don't want it? Sorry. Time to go. So be careful when you say you don't want a charger. Man, some of those classic cars, gateway cars, they have the Mustang that was the same Mustang they used in Bullet for the chase scene. They wouldn't even tell you what the price was. You have to call them.
You know it's not good when you have to call.
And I'm
Price
like, man,
is not listed, just keep scrolling.
wouldn't it be great to have a car like that? But then I think about where the heck would I drive it out here, where the roads just are. The roads speak to each other out here in Houston, and they say, I can't wait to destroy that undercarriage of that 1995 Dodge Plymouth, whatever. And you know what's right? I mean, where would you drive it? It would have to be for shows. Beautiful Chargers, beautiful Mustangs from the 70s. Gateway's got a lot of them, but man, you would need a carrier, right? You would need a flat. You would need something to carry that car to wherever, you're not going to drive it
depends
on
what type
Westheimer.
of condition, right? I mean, I wouldn't go down Westheimer. We have a 66 Mustang. Had it for years. But it's not a show car. And it's not a daily driver either.
No,
so,
you can drive it around the neighborhood.
Yeah, the rule is you've got to drive it at least once a week. I mean, I can make arguments to get rid of it, but it's, I don't know,
drive it during parades. I see cars.
Yeah,
go
yeah,
through
we've
like,
done
hey,
that. We've done parades with it. Kids love it.
Yeah.
My wife loves it. In fact, there were times I said, man, what are we doing? Let's get rid of this thing. And she's like, nope. But she has a bad day. It's great. I can throw her the keys. Like, hey, go for a ride. Come back in an hour.
Just don't go far.
Yeah.
The undercarriage can't handle it.
Keep your cell phone close.
Oh, man. Well, beautiful cars. Beautiful cars. So one of the things as we talk about these ways to look at your finances in 2024, a little bit off the beaten path, is you've got to really consider your human capital. And what are you worth? You are your greatest investment. It's tough to think that way, but you need to choose yourself because that's wealth that you will achieve and increase your earnings over time. Continuing education opportunities, improvement options. I don't care how old you are. It's important to do so. So Coursera, I've checked out quite a few times. That's Coursera.org. 5,000 courses available at a nominal fee. There are so many avenues online now, Danny, from a lot of schools and places that will teach you a new skill or sharpen your blade. That I don't care what age you are, especially if you want to maintain your mental acuity, to go ahead and check out. Well, because I have people that'll tell me, like, I'm too old. Look, you're 45, dude. You're too old to learn a new skill?
I think you should always be learning new skills,
Exactly.
especially with whatever you're doing. Or maybe it's something that you don't do right now, but it's just something that broadens your what you do, your thought process, how you think about things. I find that the learning, we spend so much time within finance and economics and all the things that go on with that we probably don't spend enough time outside of that in many ways. But I find when I do, I appreciate it quite a bit more. But yeah, Coursera.org is pretty neat. It sounded like Rich and Brent, you may agree. It sounded like he said, well, of course, Sarah, I've checked out online a couple of times.
Oh, of course, Sarah. Well, maybe we should create a new one.
I was
Of
like,
course,
who's Sarah? What is he talking about?
Of course.
Siri's sister, isn't it?
Yeah.
Sarah?
Sarah is Siri's sister. Say that 3 times fast.
She's very serious.
Yes.
But there's so many avenues now to learn new skills. I don't care if it's photography, whatever it is that's going to, in the first couple of weeks, you're going to be very uncomfortable learning something new. But that's your brain sort of adjusting to that process. That process of adjustment, I don't know, fires up your neurons. You may feel it's uncomfortable, but I actually think in the long term, it's allowing you to make room to learn over time. Or you have existing skills and you've just gotten stale at some of the things you're doing now and you want to get better. Those levels of improvement are available to you in many ways today. When I see older Americans that have retired and go back to school, I give them a lot of credit. So I know one gentleman, he's 91 years old. He went back to school to get a degree. I give him a lot of credit for doing that. He's not going to work. He's just in school, going to school for accounting. And I'm like, more power to you to do it.
We're seeing a lot of people who retire. There's a lot more courses at universities that allow
Absolutely.
them to kind of broaden what they're doing as well. And I think what's really good is it keeps people engaged. It keeps them social. It gets you out amongst people. That's why we've seen a lot of retirees moving to college towns. I think it's a great thing, even if you're not going to use it, but just having that knowledge, being able to engage and just continue your education, I think is fantastic.
Absolutely. I have one client who went to school to become a certified financial planner.
Yeah.
Because he wanted to better understand the advice that I was providing to him. And I thought that was great. So people would say, well, then he's going to manage the money on his own and he's going to move his money. Well, he might. I don't think so, but that's okay.
Yeah.
He's learning. So when I talk to him, it's at a different level now because he went through the courses and he also learned to appreciate what we went through to get that. certification.
That's true. Yeah.
So he also has a level of appreciation. But why would someone who's retired want to do that? I'm never going to practice. I don't care. I want to. You're telling me this about my money. I want to know more. I give you credit all day long for that. So consider your human capital. If you are a younger person and think about what your earnings are going to be over a lifetime, anything you could do to boost that bottom line of you is going to be important. Just like what Lance says, you want to build a lot of wealth, true wealth, you create your own business. But also education is important. Even if you just say you want to work in the corporate world, but you're going to go ahead and take a step above and learn skills that will make you more valuable to that employer, you will make more money. Maybe you'll get stock options. Whatever it is, it's not going to hurt you, no matter what age. So that's called your human capital, and that's important. You also have to get your head straight. And today, what I mean by get your head straight, I am amazed of how jealous people are of others who are prospering financially. You didn't make this. You didn't do this. Oh, that was so easy for you. You should pay your fair share, and all a bunch of crap that I hear. When I was growing up, probably the same for you, Danny, because the world is very different. You would look up to people like that, go, oh, how did they get there?
You would aspire to that.
Right. You would
ask
aspire
questions.
to that. You would
Hey.
ask questions.
Yeah.
Right? You like, oh, he or she did that. I think I could do that. Not today. Now it's, where do you have that I can take from you? Because you don't deserve that.
Well,
and that bothers me. So you got to get your head straight. You got to talk yourself out of, don't talk yourself out of empowering money habits. Jealousy is an energy sucker. It's a cash drainer. And I don't think anybody who's listening to this show has this mindset or on YouTube, but I am certain you know somebody who does.
no, they're all around us. I think the social media environment and then just what people are subjected to kind of fosters that environment where we want more, and then all the stuff that you hear. But looking up to that or trying to aspire to that, I think that's not a bad thing. But understanding that what you see, number one, may not be real. Number two, if it is, it wasn't always this easy. And you may think it's easy from the outside looking in, but you don't know what they're dealing with behind the scenes. And, that's like social media. I'm not a big fan of getting on there and posting everything, right? For four of those reasons. Not that I don't think, like I'm going to make somebody jealous, but, the blood, sweat, the tears, the sleepless nights, the things that you don't see, and you don't know how long they did that before they got to where they are today.
I have a lot of people who post like the accomplishments that they've had. Like, I made this, I got this award and all that. You just got to say, hey, that's great. That's a good thing.
Yeah.
And if you make a lot of money, that's great. That's great for you and your family, most likely charities. But unlike one president said, at some point you've made enough money. Whatever the hell that means.
What is enough money?
I don't know. If you ask that individual who said it, you got to look at how many houses that individual has and wonder, how many houses do you need and how big do they need to be? But what you have to keep in mind is you can even admire somebody like that who rose to that level if you look at the skill set that it took to get there.
Yep.
When we get back, we're going to talk about our last couple of steps, things you need to keep in mind to be resolute. I like that word. I'm going to use it a lot today to annoy people in 2024. We'll be right back.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Looking for clarity for your investments in the new year? You must attend our 2024 Economic Summit, Navigating Markets in a Presidential Cycle, featuring Greg Valliere.
Trump will be a big presence. The bigger story, in my opinion, is how weak Joe Biden is going to be.
Is the Fed finished tightening?
Liquidity, I think, is underestimated.
Will rates ease this summer?
States are still flush with cash. They haven't spent all their money from the pandemic relief bill.
How will the election affect your investments?
I don't see any political figure right now who can bring the country conclusively back together again.
Register now for our 2024 Economic Summit, Navigating Markets in a Presidential Cycle, featuring Greg Valliere with special guest Adam Taggart, plus Michael Leibowitz and Lance Roberts. Saturday, January 27th at the Hotel Sonesta, Houston. Navigating Markets in a Presidential Cycle, featuring Greg Valliere. Saturday, January 27th at the Hotel Sonesta, Houston. Registration open now at realinvestmentadvice.com. Realinvestmentadvice.com.
You're listening to The Real Investment Show.
Have the market's gyrations made you nervous? If so, it's because you have more risk in your portfolio than you realize. It's time to reevaluate your long-term investing strategy with RIA Advisors. Our disciplined approach can help eliminate unnecessary risk. We do that by having both a buy and sell discipline. Does your advisor do that? If you think it's time to work with an advisor who puts your interests first, it's time for real investment advice. RIA Advisors, 855-RIA-PLAN. RIAadvisors.com.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
And we're back. So 2024, I didn't realize people give up the ship on their resolutions so early, but it makes a lot of sense. Actually, even at the gym, well, at Orange Theory that I go, it's not as crowded as I thought it would be in the beginning of the year. And a friend of mine said the gym hasn't been that way either. So I said, I wonder if people are taking just an extra week off. Maybe they'll be back in the groove next week.
Well, I noticed a lot of school districts, at least around here, some of them don't start till next week.
Yeah.
So maybe people are still traveling. The roads have been a little quieter, which I appreciate, especially this morning, pouring down rain.
I know in Houston, some schools aren't back until next week.
Yeah.
So maybe we'll see a pickup there. I'll pick up my resolutions then. I'll create my own January start date. How dare you? So one other thing you have to keep in mind for 2024 is stocks are not the end-all investment. They're not the panacea for everything that you do. It's to fight inflation, stocks are the best thing. Listen, there are a lot of ways to do it. There are very few people that can keep 100% of their money in stocks. And if they were retired and living off distributions from their retirement account, we'll talk about this next week, more from some latest research from James Sandage, who I follow for retirement income. It can be devastating for you to take withdrawals in a year that you're down in a stock portfolio. In some of James's research, he shows that even if you're down maybe less than 3% in the first year of retirement and taking distributions of 5%, that you could be putting your lifetime of withdrawals in jeopardy. Unlike Dave Ramsey, who says that you can take 8% a year out of your...
And expect 12% returns each year.
He never stops with that. There's certain commentary that he will not give up on that 12% rate of return. He just won't. And you can just take 8. But 3, 4, you guys are nuts. That kind of advice is going to put you in the poorhouse real fast. But you don't want to put all your money into the stock market. Equities beat inflation during long-term bullish trends. That's true. That's about 44% of the last century. That's according to one of my mentors, Jim Otar, creator of the Retirement Optimizer, right? Deferred income annuities, making sure you're making good decisions with Social Security. Bonds, yes, I know bonds are a dirty word, but even though yields are coming down, they're still attractive if you're buying individual bonds. And I have people that are willing to just throw away Treasury inflation protected securities because they're not getting 9.6% anymore. I have to get out of that now. Listen, this is an investment, albeit not very exciting, that whatever the cost of living is, at least the government's assessment of it, you're going to get it. What's so bad? What's so bad about that? What, you can't put enough in it, but why am I all of a sudden chucking it like it doesn't make anything and it's no good? You forgot the original premise of why you buy it. How many times did we have these conversations with people who were buying those DI bonds when they were so hot in the tips, and we were saying, listen, this is not going to, remember why you're buying this.
This is a theme.
The theme. Remember the theme,
yeah.
right.
Yeah, it's not something that's going to be there forever, but take advantage of it while you can. But keep in mind that you're only keeping up with the pace or rate of inflation. And that's the intent of it.
Yeah.
And, you can't put a ton of money in there, $10,000 a piece. But if you're married, however, if you do get a tax refund, you can put up to 5 additional.
Yeah, 5 additional.
And understand the rules if you take it out early. Mm-hmm. But this can go on for a long period of time. But the caveat is, I think most people we visit with could probably max these out. A lot of people can't. Majority of America cannot max out $10,000.
I know. But you're not supposed to hate them because they're 9.6%. They're not doing what Microsoft is doing. They have a place.
Well, that's for safer money, right?
Exactly. So people have to understand that stocks are not the only investment out there, and they're not going to be the only things that will help you increase over inflation. You also have to keep in mind is that you want a balanced approach to what you're doing, albeit I understand stocks and bonds move together. This correlation has been very tight. However, it is important to look at other types of investments. And if you feel that your income stream, you're going to outlive it, then there are people I know who will go ahead and say, I'm going to max out Social Security. I am going to do an annuity structure where it's going to pay for all my fixed expenses. Anything I need to do to keep a roof over my head, I am going to cover by guaranteed income. Well, guess what? Those people can put 100% of their money into equities if they want to, because they're not taking distributions from it. And if they are, they're minimal. I have one client that's done this, where he's used Social Security and an income annuity structure to pay, for the most part, almost all of his fixed expenses. Some of his variable stuff, he takes the dividends from his 100% stock portfolio. That's it. He lets it ride. So even when the market's down, he doesn't care because he's getting a check that's coming in every month. He doesn't need to tap that account for anything. He will rebalance it, and if there's excess, any gains he has, he will take that money out and he will go ahead and buy a Treasury inflation protected bond or something guaranteed. But for the most part, he has a very aggressive portfolio for someone who's 77 years old, because to him, the volatility is not hurting him. It's his friend in some ways because of all the guaranteed income he has.
Well, it's the icing on the cake, right? If things do really well, he can distribute more. If things go poorly, he already has his expenses paid. He says, "Hey,
right.
I'm gonna step back. Maybe I won't pull as much from it this year."
Well, at all.
Yeah,
but it's not a detriment to his retirement income strategy.
Correct. It's
right?
not the only thing he has.
Right. So yes, financial media, many advisors, many wirehouses. Stocks are the only game in town. Listen, I love individual stocks. I invest in individual stocks. I study them. I've been doing that for a long time. I like it. I feel comfortable with them. I understand the benefits of ETFs for most people. But I am seeing, I saw a study recently, Danny, more and more younger people, Gen Zs, are looking at stocks more than they are ETFs.
It's interesting.
So I'm starting to see more studies of actually them looking at individual stocks or being at least asking questions about them versus ETFs. So I thought that was pretty interesting.
That is interesting. I wonder what the thought process behind that is, especially because there's been such a push with the ETFs over the last, 10 years. And they've gained so much popularity. I mean, if you look at these big, BlackRock, Vanguard, they've been gaining market share. Mm-hmm. They're so huge. I mean, billions of dollars pour into these funds. And a lot of it probably through, retirement plans, not just people going out and purchasing them. But I get it. I think when you have a year where you see some of these individual stocks do really well and others not, I don't know. I wonder if people rethink that. Unless they're only going after that specific space.
I'm going to try to see if I can interview some of the people that I know, because I think for some of them, they're comfortable with the names.
Yeah.
Like, in other words, an ETF is sort of nebulous. Like, it's got a fancy title to it. It sounds catchy, but I don't really understand what's inside it.
But are we investing in the name, or are we investing in the product, the company?
Well, I think that's what it is. I think if I invest in Apple stock, it's because I own Apple product, and I'm not apt to sell the stock as easily because I'm sort of attached. Now, that's a double-edged sword. I could be attached to a loser. Like I told my daughter, don't be attached to losers.
Don't do it.
Don't do it. But, so yes, but it's just an interesting trend that's starting to emerge. And I think maybe Reddit boards, Danny, I notice when I go on and look at when I delve into that rabbit hole of Reddit, it seems like a lot of younger traders or investors are talking more individual stocks than they are ETFs. Like, ETFs are for old people. We want the stocks. And if you're doing your homework, I get it. But how many of those people are doing homework as opposed to just reading something on a Reddit board and saying, oh, that sounds good? That's another issue you have to take notice of. But I just think it's an interesting trend.
Well, and not only that, but do people know what they're doing when they're doing that homework? Or are we just relying on data? Are you able to crunch your own data? Are you able to understand?
And listen, the data is out there. The books are out there. If you want to learn, hey, free cash flow, what does that mean?
There's great
Dividend
books.
growth, right? A lot of great books on this. So also the last thing is stop the competition. I have friends, they want more cars, more stuff. They want to compete. I don't care to compete with anybody else. I am not going to drive a Maserati to impress anybody. I don't need to do that. And I think your financial advisor needs to be that way. Don't you, Danny?
Yeah. Well, so I've never got the impressed part, right?
No, I never did
The
either.
competition of that. And I get there are people that do that because everybody's different. Everybody has different goals. And I think we have a different vantage point, too.
Yeah.
Because we deal with so many different types of people. And listen, if that's your goal, great. But make it your goal, not somebody else's. And then just because I know people that, if Billy goes out and buys a Maserati, then, Joe has to go buy one too, right? That's not always the best thing. What is your goal? Is it in these cars? Is it in certain things? That's okay too. But have you set everything else up? Because what happens when the cash flow starts or human capital begins to diminish? That's when you get into the bigger problem.
Hey, man, Timex and a Rolex are still going to tell you what time it is.
Yeah.
I couldn't care less about impressing anybody else. And I think that's what the Millionaire Next Door book is about. Getting good value for good price. They don't buy the cheapest, they don't buy the most expensive, but they want value and quality.
And if you like nice things, that's okay. Just understand, set everything else up prior.
Just get them at Walmart. We'll see you next week.